I've watched buyers lose the house they wanted, not because someone outbid them on price, but because of one piece of paper. They walked in with a pre-qualification letter thinking it meant the same thing as a pre-approval. It doesn't. And in today's market, that mix-up can cost you the house before you even get to negotiate. Today, I'm breaking down exactly what separates the two, what a lender actually verifies, and the process I walk my clients through so they show up to an offer as the strongest buyer in the room. Welcome back to Mortgage Story. My name is Scott, and I'm a licensed mortgage broker of over 20 years. This channel is where I break down real mortgage numbers so you can make confident decisions, whether you're buying your first home or your fifth investment property. No fluff, no sales pitch, just the real math. Let's get into it. Let's define these clearly because the terms get used interchangeably online and they are not the same thing. A pre-qualification is based on what you tell a lender, your self-reported income, debts, and estimated credit. Nobody verifies any of it. No documents, no credit pull in most cases, no underwriter ever looks at it. You can get one in about 5 minutes online, and it's essentially an educated guess. A real pre-approval means a lender has pulled your credit, verified your income and assets with actual documents, and in most cases had an underwriter review the file. It results in a conditional commitment, meaning, barring anything changing, you're approved for that loan amount. That's what carries real weight when you make an offer. Here's why this distinction actually matters at the negotiating table. Take a look at this chart. Each bar represents how much confidence a seller and their agent typically place in that piece of paper. Not a guaranteed number, just the general pattern I see deal after deal. A pre-qualification letter sits at the bottom because the seller's agent knows it hasn't been verified. It's a promise, not a commitment. A standard pre-approval jumps well above that because now there's real underwriting behind it. And an underwritten pre-approval, where the underwriter has reviewed everything except the specific property, sits near the top because it behaves almost like a cash offer in the seller's eyes. In a multiple offer situation, that gap is exactly what decides which buyer gets the house. So the honest answer is, a pre-qualification isn't wrong to get. It's a fine first step to understand your ballpark. But if you're about to write an offer with only that in hand, you're walking into a negotiation as the weakest buyer in the room, even if your finances are actually strong. So what actually happens during a real pre-approval? Here's the checklist a lender works through. The first thing we ask about is your income and employment. That could be providing pay stubs, W-2s, or tax returns, and a verbal or written verification of employment. Next are your assets and or bank statements showing your down payment and reserves are real and sourced. And lastly, your credit, a full credit pull, not an estimate, which helps us determine your debt to income ratio. All of that verified income measured against your verified debts to confirm what you can actually afford. Every one of those items is something a pre-qualification skips. That's the entire gap in one slide. So how do you actually get from browsing listings to holding a real pre-approval? This is the exact 3-step process I walk clients through. I call it the power buyer path. Gather, verify, commit. Step 1, we gather info. We start by collecting your documents up front. Pay stubs, tax returns, bank statements, ID. Having this ready before you even start touring homes is what lets step 2 move fast. As for step 2, we verify things. This is where I differ from a lot of big bank pre-approvals. I push your file through underwriting early, not just provide a loan officer's estimate. Your file is actually in underwriting and moving forward. That's the difference between a standard pre-approval and an underwritten one. And it's the fastest way to close the confidence gap we just talked about. And lastly, step 3 is to get a commitment. Once verified, you get a real pre-approval letter, one that names a specific loan amount and reflects underwriting sign-off, not just a guess. That's the letter you hand to a listing agent, and it changes how your offer gets read and strengthens your position as a viable buyer, which helps win deals. Before we wrap this up, here are the 5 mistakes that I see homebuyers make most often, and any one of these can undo the advantage we just built. Don't assume that a pre-qualification is enough to make an offer. Your chances of winning that contract are low. Don't use an online calculator instead of a real lender, as this can be a complicated industry that doesn't function well in a touchless manner. Also, it's not a good idea to wait until you find a house to start the process. Get pre-approved before you tour homes. Number 4 is don't make a big purchase or open new credit after you're pre-approved, since that can change your numbers and put your approval in jeopardy. And lastly, don't shop for homes above your approved range just because a listing catches your eye. Any one of these can knock you back to square one right when you need to move fast on the home you love. As we touched on in previous episodes, speed wins in this industry. Recently, I was working with 2 clients, we'll call them the Cunningham family, who lost a house with a pre-qualification letter from an online lender. The Cunningham's offer was the highest offer. However, it wasn't the one the seller trusted and had confidence in that the deal would reach the closing table. 2 weeks later, they came to me, we ran the power buyer path, and they had a fully underwritten pre-approval in less than 2 hours. Their next offer on a similar home at a similar price was accepted the same day it was submitted. This is one of the many strategies that I go over with each client that helps win deals. There is a link in the description of this video to book a free one-on-one call with me. Let's knock out the 3 questions I get asked the most. Does getting pre-approved hurt my credit? Generally not. However, if you've had many credit inquiries over the past 30 days, then yes, it is possible, but only temporarily. But to be honest, that dip would be minor compared to the negotiating power that you can gain with a fully underwritten pre-approval letter. The next question is, how long is a pre-approval letter valid for? Usually 60 to 90 days, depending on the lender. After that, you'll need updated documents to refresh it. And lastly, does a pre-approval cost anything? Not with most lenders, including me. It's a normal part of the process, not a paid service. So here's your takeaway. A pre-qualification is a guess, and a pre-approval is a commitment. And in a competitive market, that difference is what wins or loses the house. If you want to walk into your next offer as the strongest buyer in the room, book a free discovery call with me using the link in the description. It's free, and it's a real conversation, no pressure, with no obligation. If you found some value in today's episode, I'll kindly ask 2 things of you to help Mortgage Story grow. Like this video and subscribe to my channel. There is a lot more to come and a lot more to learn. And if you're sitting there thinking, you know what, I think I am ready to make a move, book a free call with me now. The link is in the description. In 10 to 15 minutes, I can look at your actual numbers, tell you exactly which programs you qualify for, and give you a clear, honest path forward. No pressure, no pitch, just real answers about your real situation. So to wrap things up for today, every home has a story, and I'm here to help you write it. So from wherever you are tuning in from across the USA, good afternoon, good evening, and good night. My name is Scott, this is Mortgage Story, and I'll see you in the next one.